All right, today we are diving deep into ESG. That's environmental, social, and government strategy. It's this massive concept that's totally reshaping business around the world. But, and this is a big but, it's built on a fundamental flaw. A flaw that could be leaving companies completely blind to what's coming next. So let's break down what's wrong and, more importantly, how to fix it. First off, just to get a sense of the scale here, we're not talking about some niche, feel-good initiative anymore. ESG has absolutely exploded into a trillion-dollar industry. Yeah, trillion with a T. It's dictating how the biggest companies on the planet operate and where global capital is flowing. It is, for sure, mainstream. But here is the massive catch. Despite all that cash, all that influence, the entire model has a critical design flaw. And Stephen Pearce just nails it right here. It's fundamentally reactive. It is great at telling you what already happened, but it's pretty much useless at telling you what's about to happen. And this slide really gets to the heart of it, doesn't it? On one side, you've got your traditional ESG reporting. It's all about backward-looking compliance, ticking boxes. But on the other side, you have ESG Intelligence Plus. This is a whole new way of thinking, focused on forward-looking foresight. This is the crucial shift we're going to unpack today. Okay, so let's really dig into this central problem. Why is traditional ESG basically like trying to drive a car down a highway while only looking in the rearview mirror? I mean, this metaphor is just perfect. All the frameworks we use, like GRI and SASB, they're great for transparency. They'll tell you exactly how much carbon you pumped out last year, but what they can't do is warn you that a coming drought is about to totally wreck your supply chain next year. They show you where you've been. In an age of constant crisis, we desperately need a satellite radar showing us what's just over the horizon. So if the old model is broken, what's the fix? Well, the solution is a fundamental change in how we see things. It's about shifting our gaze from the past to the future with something called ESG intelligence. So what exactly is ESG intelligence? Think of it as ESG 2.0. It's the evolution. It stops being this static, once-a-year chore and becomes a dynamic, living system of foresight. And the real magic happens when you start integrating predictive data with geopolitical risk and sustainability trends. That's what lets you see a crisis coming before it hits. This kind of evolution is totally natural. We've seen it happen again and again in other parts of business. Simple accounting, bookkeeping, grew into strategic finance. Piles of raw data evolved into predictive business intelligence. So this move from ESG reporting to ESG intelligence, it's not just a good idea, it's the inevitable, logical next step. Okay, so how does this thing actually work in the real world? It's not just wishful thinking. It's built on 4 interconnected pillars that, together, create a complete system for seeing what's ahead. Let's break them down. The whole foundation rests on these 4 key ideas. First, you've got to use predictive analytics to get out ahead of the trends. Second, you have to integrate all that crucial geopolitical context. Third, you start reframing risks not as threats, but as opportunities. And finally, you have to redefine what success even means to include societal stability. Let's take a quick look at each one. Pillar 1 is all about the data. Instead of using lagging indicators like last year's emissions reports, ESG intelligence uses leading signals. We're talking about using satellite imagery to see deforestation in real time, AI models that can predict food shortages, even social media data that can flag the early whispers of social unrest. It's about constant monitoring, not a dusty annual report. The second pillar, geopolitical integration, is so critical because, let's be honest, these sustainability issues don't happen in a vacuum, right? This quote is a perfect example of what we call a risk cascade. An environmental problem, like a lack of water, very quickly spirals into a security crisis. ESG intelligence connects those dots. It turns climate analysis into something that looks a lot more like a national security framework. Now, Pillar 3 completely flips the script. For too long, ESG has been seen as a cost center, a burden. But when you have foresight, risk becomes a signpost pointing directly towards opportunity. Suddenly, water scarcity isn't just a threat to your operations, it's a massive driver for innovation in water-saving tech. This reframes the whole conversation from a compliance headache to a source of real competitive advantage. And this final pillar, this one redefines success itself. See, traditional ESG might stop at counting carbon credits, but ESG intelligence asks much deeper, much more important questions. Like this one, did our investment actually make things more stable? Did it build trust? It shifts the goal from just making money for shareholders to ensuring long-term societal stability. All right, that's all great in theory.
But what does this actually look like on the ground? Let's use a case study to see the real-world difference this shift in thinking can make.
We're going to zoom in on the Sahel region in Africa. It's an incredibly complex place where climate change, a lack of resources, and instability are all dangerously tangled together. It's the perfect example of a place where the old, reactive ESG models just completely fall short. And this is where the difference becomes just crystal clear. A traditional approach, it gives you a report on water usage from last year, long after a crisis is already underway. ESG intelligence, on the other hand, uses predictive data to forecast migration patterns before they even happen. This allows governments and organizations to act preemptively, to get ahead of the problem, saving resources and, more importantly, saving lives. Look, this isn't just some interesting academic idea. The shift to foresight is desperately urgent. Why? Because we have officially entered a critical window of time, a decade of decision, where doing nothing has severe and accelerating consequences. Just take a look at this timeline. This isn't some far-off, distant future. This is the trajectory we are on right now. And these aren't just isolated problems. They are cascading tipping points that traditional ESG reporting is completely, utterly blind to. Let's put a hard number on this. By 2030, and that is less than a decade from now, climate change is projected to displace up to 300 million people. Just let that sink in. That's almost the entire population of the United States on the move. We're talking about a humanitarian and security challenge on a scale that's hard to even imagine. And it doesn't stop there. By 2040, 5 billion people, that's more than half the planet, are expected to be facing severe water stress. This is the kind of thing that will ignite conflicts over resources and destabilize entire regions. Waiting around for a report on this after it happens, that is not a strategy. That's a failure. Which, at the end of the day, brings us to the one crucial question that every leader, every investor needs to be asking themselves right now. Is your strategy built for the world that was or for the world that is coming? Sticking with backward-looking models is no longer just a missed opportunity. It's actively choosing to be unprepared. The good news is, this leap from passive reporting to active foresight is already happening. It's being led by pioneers who are defining this critical new discipline. They're building the tools we need to navigate the incredible complexity that lies ahead. Because let's face it, in the 21st century, foresight isn't just an advantage anymore, it's essential for survival.